Welcome to another episode of Elixir Talks, where we discuss information which simplifies real estate and enables you to achieve your goals better. In this episode, we will discuss what are most important things we should keep in mind when we have received a mortgage approval. However, the mortgage is not yet closed as yet. Delay any job switches. Till the time you have secured the finance and closed on the property, it is advisable to not do any job switch or become an independent contractor. The lending institutions and banks like a stable permanent employment. Especially if the new employment is on probation, it is a red flag for the lender. Some lenders might not have an appetite on change of job roles. For example, if you went from a technical role in IT, such as a architect, to a pure managerial role or vice versa, these things are not taken lightly. Applying for any credit cards or car financing, etc., till the time your mortgage is funded and you have closed on the property. Any loans or finance you take in advance of the home closing might negatively impact your credit worthiness and ultimately the borrowing capacity. Be regular on your credit card payments. Missing on any of your credit card payments will negatively impact your credit bureau score, and if the mortgagee pulls your score before completion, it might make it difficult with a reduced score. And if it doesn't meet their threshold, it will be a problem. I had one of my excellent buyer clients, and they had a small expense in one of their US credit cards, which was left unpaid, and they missed to see the reminder email from the bank. Unfortunately, it was reported as default in their credit history, and even though it was an insignificant amount, they had to wait for 6 to 8 months to rebuild the score to the level which banks desire, and they had to delay their purchase. Don't purchase furniture on credit. Before closing on the home, it is a good idea to refrain providing your credit card to take furnishings or appliances on credit or a payment plan. Let the home close successfully and then you can go for a small financing as needed. The thumb rule always should be big loan first and then comes small loan. Another important one is maintaining history of deposits. Generally, the financial institutions will require a minimum of 3 months history of all the money which you are trying to utilize as your contributions towards purchase of the property, which is called down payment. If you are expecting any money from external sources apart from employment or your pension income, you should keep a copy of the receipts to back it up as a proof. The whole intent here is that banks want to ensure that it is indeed your money which you are contributing towards making the real estate purchase. Another important one is avoid being a cosigner with others. If you have co-signed on someone's credit application and they default on the payment or have late payments, that might negatively impact your credit score, which might be a hindrance for your mortgage borrowing ability. If the bank runs a check before closure, it might alter their decision to allow the loan. The basic theme of all of these points we discussed is that lender has a right to say that the conditions and terms have changed since you got your original approval. It could be due to change in your job situation, credit worthiness, and borrowing ability, etc. And we want to avoid these situations till the time mortgage is funded and closed successfully. Hope this was helpful. Thanks for watching, and if you like this episode, do subscribe for more such content and share with your friends who might be in a disposition where they have got a mortgage approval but still it's not closed as yet. Stay positive and I will see you soon.